Hello guys, welcome to the weekly watch list. So unfortunately, no webinar today for the members. This is just a standard YouTube video. As I'm filming this on Saturday, I'm actually leaving on Sunday. I'm flying out of the UK, so I won't have time or the ability to do a webinar. So I do apologize about that for any members watching this. But let's move ahead. So last week, I called the markets pretty perfectly, actually, and I don't mean that to be a stroke of my ego. It is just what it is, Go back to last week's and just have a look at what we're watching. The watch list hasn't changed because the markets are still the same as what I viewed them as last week. So we'll start off with gold. I actually posted a reel today about gold, and essentially, I think I am pivoting short more day after day. So the real thing behind gold is if we just consider the huge run it's had over the past couple of years, those drivers are sort of burnt out now. They're fully priced in. There's not really any developments. Now, by no means am I saying gold is going to go down to 1500, 1900, 2000 or anything like that. I'm just very aware that we could have a pretty major pullback on gold. Now that's contributed to obviously sellers and people taking profits. But if we just think about what's really been driving gold over the past couple of weeks, couple of months, we've had obviously Russia, Ukraine, that's been up in the air for a long time, but it is priced in. There's not really anything new there. But it does seem like we're actually having a little bit of progress towards peace. We've had the Middle East, which again, that's sort of settled down a little bit. But again, it's priced in. We've got we've had India and Pakistan. That's done. We had the ceasefire. The Fed currently isn't cutting rates just yet. We've got the Trump tariffs as well, finally the cherry on the top, that seem to be pretty cool so far. Again, priced in, and the most recent developments seem positive. So the risk sentiment of the markets just isn't supportive of gold. There's no real attraction to risk off right now. And then if we pair that with the recent dollar gains that we've had over the past couple of weeks, where you can see right here, the dollar managed to reject 98 and come back up to 101, give or take. Obviously, I had a little bit of a rejection, but it is what it is. So I am still looking to short gold. First level of interest, as far as I'm concerned, is around 3,000, which would line up really nice with this previous low. It would also provide a pretty nice mean reversion to the 200 moving average. Let's see if I can pull it up on the daily for you here. Sorry, guys, give me a second. Let me just apply the correct indicators. There we go. So you can see this is the daily time frame with an area chart. We are coming down to this 50 moving average, which is the dotted line. The next one is this 200 moving average, which would very likely come and meet price if we do come up to this 3,000 area. So we could see something like that. Ideally, we'll see. We'll have to obviously reassess the markets when we get to that point. But I'm very confident in saying that that is a possibility that I am accounting for. So 3,000 on gold is the current target I've got. In terms of an entry, I don't have a hard idea in an entry. I don't have I want to sell at this price level because of this, and that's the trade. I don't really have that just yet. And the reason is because I'm a little bit skeptical on gold. As I said, I am sitting slightly bearish, but I also need to account for the fact that gold is very bullish. The trend has been unbroken for a significant amount of time. So I need to see that confirmation. Now, whether that will be price comes back up and creates a lower high from relative to this previous high at 3,400, retest this level of resistance, fills this gap, and obviously this trend line, then possibly down. That would be the ideal entry. So I'm just watching to see if we can get that. It might take 1, 2, 3 weeks to get something like that. I don't know. But yeah, gold's not something I'm overly interested in getting into. Again, I don't really like to fight the trend, which we would have to do in this situation. But the fundamentals call for it. So if the entry presents itself, I will take it. Euro dollar, again, called this one last week. I pointed out this break and retest candle that we had. Well, sorry, the retest candle we had after the break, which has moved very well. Obviously, the markets opened with a gap last week, which did get filled pretty much perfectly. And since then, we've just come back to the downside. Now, I personally can't take any trades. I haven't taken any swing trades last week, obviously, because I'm going away this week or tomorrow, today, whenever you're watching this. Because I'm going away for a stag do. I just don't want to put myself in a position where I wake up hungover or I'm out for some day drinks with the groom, and I've got to manage trades. I don't want to do that, so I'm personally not taking any trades at the moment. We've given a lot of ideas to our members. We've got a lot of members that have capitalized on these ideas, but I can't take too much credit because they were my ideas, sure, but I didn't tell them how to execute. Credit goes to them on that one. So I would still be very happy to short euro dollar. I'm still very much in the idea that the euro isn't or doesn't have enough of a macro support right now. We've got the ECB that's cautiously cutting, but that, again, against the Fed, it's not really enough. The Fed's paused. Now, we have had lower inflation data for the US, slightly worse data, so it's not been that supportive for the dollar either. However, just looking at the price action, I still view this market as really expensive. It's really overvalued in my view. So accounting for the fact that we've, German fiscal stimulus is done, that's in the price right now. The euro benefited heavily from the dollar weakness that we saw when people were selling dollars, buying euros, because the euro is the next liquidity asset that currency investors, currency traders will go to from the dollar. It makes sense. But now that those tariffs are done, I think we could easily see euro dollar start to come down and correct some of this left side traffic that we've had. Target, again, could be a little bit up in the air because we are fighting obviously a lot of this trend. Conservative, if you want to be a little bit safe, I would be looking for around the 1.09, where we are currently around here. Or if you want to be a bit more aggressive, maybe with a trailing stop or some scale-ins, then yes, I'd be looking for a full correction of this entire left side, possibly down into 105 or 1.05. So we'll see. Dollar Swiss also seems like a really, really good idea as far as I'm concerned. I'm fairly sure we've got an institution that's long dollar Swiss as well. We do. So we can see here we have got Credit Agricole here is long on the dollar. Oh, sorry, that's dollar CAD. Dollar Swiss is this one. Yeah, so we've got them long on dollar Swiss here. So you can see that take profits at 0.87, entry is at 0.84, stop loss is at 0.83. So I'm not copying their trade idea, but I am going to use their bias as a confirmation for my own bias, if that makes sense. So I'm quite happy to take a position, or I would be quite happy to take a position here. We've had almost a fill of this gap, not fully, but it's enough for me to say, okay, I'm willing to give it a go. So we could enter aggressively somewhere near where it is, in between the current price level and the previous low. We could go in for a tight stop loss here. That would be reasonable. However, ideally, as far as my strategy calls, I would like a stop loss below these lows. Entry at this bottom of this gap that hasn't been tested yet, and a take profit all the way up to correct this tariff. Come back to this pre-tariff level. Again, I think we are going to see a rotation out of risk assets such as Swiss and yen and gold, and I think we'll start seeing a little bit more buying interest into the dollar as time goes on. So I'm quite happy to look at dollar longs and obviously dollar Swiss longs. Now, oil, I don't really, it's not, I said this last week, oil's not something I look at very much. It's not an asset that I pay much attention to. I don't really pay attention to OPEC too much. It's just not my thing. However, the idea I had was very good so far. It seems like we are changing trends now. I mean, this trend line actually is irrelevant now, but we are continuing to move higher, obviously from this really aggressive downside move we've had on oil over the past couple of months since basically since the start of the year. The oil's just been dumping. So it would be really, really nice to start looking for some corrections. Again, we do have a gap here on oil at around $70.70 a barrel, so we could look for a correction there. But oil's not a priority for me. This isn't a market that I'm desperately waiting to get into. It's more just if an entry comes, I might take it low risk, see what happens. But I'm not banking a lot of apples on oil, if you will. Euro pound. I love Euro pound. I've been speaking about this market a lot recently. It's presented an amazing opportunity to DCA. Now, I didn't do this DCA, so if anyone has been watching me for a while, you'll know I dollar cost average euro dollar and euro pound and the Aussie New Zealand, because they're very sort of range bound markets. Specifically euro pound and Aussie New Zealand, you can catch great just range bound markets for DCA. That's perfect. And the behavior of this market is very, very sort of expected. We often have very aggressive moves to the upside. And when I say very aggressive, I mean it can be hundreds, well, maybe not hundreds of pips. So let's just measure so I'll get that right. Yeah, hundreds of pips. This was almost a 400 pip move. So they can be very nasty to get trapped in, obviously if you're over risking and things. But the main point of what I'm saying is once we've had these aggressive moves, we often get a really nice downturn to the downside here that we can generally capitalize on. So I'm quite happy to possibly look for a short on euro pound. If we can maintain this sort of level, I think we could get in for some really, really nice shorts. The only issue is with euro pound is from a technical aspect, it can be quite difficult to get into. As I've already said, we can see a lot of sort of aggressive moves and whipsawing. So going off typical SNR levels and fibs and things generally doesn't work very well on euro pound. That's why I like to DCA it as well, is because I don't have to worry too much. But yeah, if you are looking at euro pound, just be very cautious of the market behavior. It can be quite violent sometimes. The pound dollar, pretty similar thesis behind the euro dollar trade. It's not my ideal option. So my idea behind the pound dollar short is if we see euro dollar start to not collapse, but if we see it start to take a really big turn or even a significant turn, that would then be a confirmation to me that the pound dollar could also follow in its footsteps. I think the pound's a little bit more stable than the euro. So we could see, again, a similar thing, a correction of a lot of this left side traffic. But again, I'm not really prioritizing pound dollar. If I had to choose between pound dollar, euro dollar, my attention would be on euro dollar. Then again, we'd be waiting for euro dollar to confirm that direction. New Zealand dollar, I called this one last week. This was the exact level I called, and we got it, and it's had a really, really nice reaction. So the only thing, because obviously the entry's gone, I'm not in this trade, obviously, as I've already said. I think the next option is to wait for a new low to get formed, to wait for a break lower, wait for another high, and then look to enter and take it to the downside again, correcting this left side back down into the support around the 0.63 level. Keeping things very, very simple this week. Again, nothing's really changed about the markets in my view. Dollar yen. Longs, again, I think could be an amazing option. Exactly the same level I mentioned last week. So we've got this high. We have the gap that did get filled, and this lines up really nice with this 0.5 fib level. So I was looking to potentially take a long, and I still really like the idea. The Bank of Japan is still dovish, ultra slow on their path to normalization. Their last meeting was very dovish. No rush to be hiking rates from the Bank of Japan, which is a shame for me because I actually really like the yen. I'd quite like to be a buyer of that market, but it's just not called for right now. So I think, again, pairing that with the rotation out of risk off assets, I think dollar yen could be a great option really to be a buyer in this market. Very similar thing. We'd be looking for maybe not a full correction back up towards 160, 155. But at least up until maybe 152, 151, roughly looking for possibly a correction of just the recent traffic and highs. Take profit at the fib extension. I think the US dollar yen might be easier to just employ a trailing stop rather than having a hard take profit level. Euro Swiss, I do really like this market to the upside. So although earlier I was saying I'm not a huge fan of the euro, I think pairing it with the Swiss is actually a great trade right now. So we've got the S&B. Let me actually just pull up the rates so I can show this to you. Yeah, so we've got the S&B still projected to go down into at least neutral, maybe even negative rates this year. And yes, the ECB is also cutting, but it's cautious. So we're pairing a cautiously cutting central bank with one that is looking pretty dire. And the inflation in Switzerland is also not really helping that rate hold or rate hike narrative even. So yeah, I think Euro Swiss could be a really, really strong trade idea. So we could look to buy some of these lows if we do see these get tapped into, or we could wait for a break, retest, continuation to the upside here. Either way, I think we could very easily see this market come up in between the 0.95 and the, well, actually, yeah, into the 0.59, sorry, the point, the 0.95 area, I think could be a great target. So that would be another, well, that is another one on the watch list, and that actually covers it really in terms of what I'm actually watching this week. If I say that, I'm not watching anything this week, I'm going to be away, but that's what I would be watching this week. So the dollar, the analysis seems to have gone a bit odd here. I think I'm on the wrong ticker. So let me just pull this back a bit here. Yeah, so here we go. We've got the dollar that's still respecting this monthly really strong support level. And we've still got sort of a trend line here. It really, really depends how you draw the trend line. Obviously, they're very, very discretional. I never put too much weight on a trend line, but I think we could all agree that we've got the low, higher low, obviously higher highs as well in the grand scheme of things. So it's now a case of, can the dollar start correcting some of this left side? So can we start seeing this high get tapped into again? This would be a huge rejection and a very, very, very nice place to start going long on the dollar. But as I said, we are seeing inflation start to cool down, which isn't great for that Fed hold narrative. But we're still waiting for more data to come. We also need to see the full effects of tariffs. But again, I think we'll probably get to that when the time comes. I don't want to try and forecast that far. I'm by no means an economist or an analyst or anything. So I think we'll leave that there. I would be looking for the dollar to gain some more strength from here. Euro, I would expect it to be sort of neutral to bearish. The Swiss and the yen, I would expect to continue to the downside. Again, it might take some time, but I do still think downside is due. And that's it. That's it for me for this week. So guys, I don't have really anything going on. As I said, I'm away, so there probably isn't going to be a YouTube video coming out other than this one. I've got some reels and shorts and things coming on schedule. But guys, I will see you later. Have a great week, and I'll see you the next week. Stay safe. Don't get margin called. Thank you for watching. Drop a like and subscribe as well. You can join our Discord. Link is in the description.